Hello, YouTube. This is Jason, aka Big Junky. Hope this video finds you doing well. It's Friday, January the 19th, 2018. I can't believe it's the 19th. Man, this time just flies by. Some weeks you wanted to fly by. This is one of them. It's been a tough week. We're going to talk about the elephant in the room. I'm getting a question a lot of how is Davor Coin, because we're invested in Davor Coin. How is it any different than Bitconnect? I'm going to be honest with you. It's a lot harder to feel as comfortable about Davor Coin today as it was last week. I mean, that's me being honest. I'm not going to sell you wolf tickets. When Bitconnect was going, and everything was swimming along fine, it was a lot easier to be confident in Devore. Today, not so much. But we're going to talk about that in a second. CryptUnite Global, that's our group. That's Jim Cohan on the left, very stand-up, great guy. That's me on the right. The jury's still out on me. We formed CryptUnite Global. It's a community for cryptocurrency enthusiasts, people coming together, like-minded, looking for a way to profit from this cryptocurrency craze that we have going on. And we're just getting together, sharing experiences, sharing investments, sharing stories, looking at the news that's in cryptocurrency and giving our thoughts on it. It's a community. People come together and we talk, and it's pretty cool, and it's growing. We're closing in on 1,000 members now. Instagram and Twitter, those are those addresses. Come join the Facebook group. The website's still under construction and shortly to come. All right. All right. I need you guys to bear with me. Give me a little leeway here today, because what I want to do is an illustration. We'll get to Devor and BitConnect in a second, but what I want to do is I'm gonna give you an illustration about price and about investing in general, and tackle some fundamentals, because I think what this BitConnect situation showed me is there's a lot of unsophistication in the market, and that's no one's fault, because sometimes people aren't you're not exposed to certain things until a certain point. And I see markets are driven by fear and greed. Everything investing is driven by fear and greed, and there's a lot of emotion in the market right now. People are sad, people are hurt, people are scared, and unfortunately, there's people excited and happy that people are sad, hurt, and scared, which is just deplorable on so many different levels. But that's human beings. That's the nature of man. So we have a lot of conflicting ideologies, and it's a tough time right now when something like this happens, and it affects a lot of people. Okay, but I want to show you from my perspective. I want to put you into my brain so that you can understand how I can sit here and have a video where we even discuss Devor and why I'm invested in it at all. And the same thing with BitConnect. And to all the you're just a scammer trying to get affiliate money people out there that are all in my comment section now, maybe you'll glean something from this too when I give you the perspective. Okay, but I couldn't figure out a way to say it in words exactly, so I'm going to do an illustration here with the market. Okay, and just bear with me. Give me a couple minutes to make this make sense, okay? Because it could be a little abstract when we begin. All right, so this is what I've done. This is the pound dollar pair. This is what I traded since 2008. I switched over to just this pair. I picked up the euro dollar for a while, but for the most part, I traded the yen dollar too. But neither here nor there. I traded this pair basically specific. What is the word I'm looking for? Exclusively. There we go. Okay, so what I did earlier before I did the video, I went back and I plotted my levels. I did a top-down analysis on it, and I went through it as if I was going to trade it for the day. Okay, and I saw what came out of that, and I'm going to show you the trades, and we're going to go through the first one specifically, and then we'll just skip past the other ones. But I just want to show you this, okay? And I'm going to make this make sense to my point. All right, so right here at this point in price would have been my first entry in here. So I'm going to get the crosshairs out, and this would have been my entry spot right here. And my stop loss, which means this is the price that says I'm wrong and I'm out of the market, would have been around right here. Okay, and if you add the spread up, this looks like to be about 11 pips total. The spread plus the distance that I'm putting my stop loss. All right, so my target is going to be 2 times my risk level. So if I'm risking 11 pips, I want to make 22 pips, and then I'm out of the trade. All right, so 22 pips happens right here on this candle. Okay, so I would be out of the trade right here on this candle where my pointer is. So right here, this was at 6:30 a.m. I don't know which time this is. I think this is the European time. And then this right here was 1 a.m. So this was 5.5 hours I was in that trade. All right. Now let me show you something that not very many people have seen except for my closest friends. Okay. This is my lot size chart. I created this chart probably 10 years ago, and it was exactly like this the last time I made any changes to it. So this is the unchanged version of my chart from 10 years. I think the one thing that has changed is my margin requirements, because we used to get 200 to 1 margin, and now it's 50. All right, so what this chart is for, this is my money management system. So basically, if I had $10,000 in my daily balance, I would then put what I'm risking per trade. So this could be anything, 1%, 2%. I've got 1% in there, but if I change it, it changes everything. Just so you see, it is functional. Okay. So 1% per trade, which means my risk is $100 on the trade. Now, the reason I created this is because my stop loss, I always trade with a stop loss. I was told once that if you trade without a stop loss, then you don't really have, I forgot the saying. But either way, if you trade without a stop loss, you're at risk of losing everything, because you become subject to your fear or your greed. You know, the market starts going against you, and you start praying that it's going to go back the other way, and you're holding on, and you don't want to realize the loss. So you hold on to the trade, and it's really, really bad. Emotion in investing is not good. You want objectivity in investing. Okay. Strict rules, entry spots, exit spots, very concise points where you enter and exit the market. You have to be precise. Okay. And this is why robots are better at trading than humans are. Because it's really, really hard if you risk 50% on a trade and you lose. Can you really risk 50% again on the next trade and lose everything? It's hard to pull the trigger. And it's what it does is it creates an imbalance in the ratio. Your strategy may be a winning strategy 60, 70% of the time, but it's hard to take every single trade, not just because you're not available to take it, but also because the fear and greed factor in your mind. Once you take a couple of losses, it's hard to pull the trigger the next time. Okay. So I'm getting off on a tangent, but the point is, I created this chart so no matter how large my stop loss is, and that's what this column here is for, I'm only risking $100, because this section tells me how much to trade. So I'm going to risk $100. And if that's going to have a 30 pip stop loss, that means I need to trade $33,000, right? But if the same trade or a different trade, I want to risk $100, I'm gonna have a 14 pip stop loss. I need to trade 71,000. You see what I'm saying? So this keeps me completely objective, and I created this chart for this. All right. So what is my point? Well, let me show you a couple other trades, and then I'll tell you my point. So that was the first trade, and that was a winner. And my risk was, let's say I risked 1%, and when I hit 22 pips, I made 2%, because my risk, my exit is double my risk level. So I'm risking 11 pips, which is 1%. So I'm going to exit on 22 pips, which is 2%. So I made 2% on the first trade, right? Here's trade number 2. I'm not going to get into the reasons of entering the trade. That's something for my for the trading videos we do, okay? But trust me, I'm going to tie this in. All right, so right here, my stop loss is going to be a little bigger here, 13 or 14 pips. All right, so my target's going to be 26 to 28 pips. All right, which happened here, happened pretty quick. That was within an hour. So I won another trade. Okay, now I plotted this exactly as I would have traded. It turned out to be a pretty standard day from when I used to trade. All right, this one I would have entered the market here, and you probably you traders out there that are watching fibs, you probably noticed a trend on how I'm trading here too. But this one right here would have had, it looks like, about a 13 or 14 pip stop loss. I would have lost this trade. Okay. This trade would have came down a little bit. It didn't do what I thought it was going to do, and it would have came up here and stopped me out, and I would have lost the trade. All right. So that's 3 trades. The course of time, by the time I was out of the trade, let's see, this was going to be 3:45. So this was basically 24 hours later, right at 24 hours. So this is within a 1 day period. Okay, I'm gonna count all three of those on 1 day. So here's my point. You have to use money management and calculate A, how much you're willing to lose, and B, use risk mitigation to size your position to match that number. When I enter into all of the trades that are on this chart, on my entry, I'm planning where's my exit for winning and for losing. And it's so now let's take that to Davor Coin. I know I'm not making a strong point here. Let's take that to Davor Coin, Bitconnect, Hashflare, and everything. I look at all of those investment platforms as separate trades. This trade here, that's Davor Coin. This trade here, that's Bitconnect. This trade here, that's Hashflare. The trade that the next trades that are coming up that maybe I didn't take. This one looks like something I probably would have got into. Or actually, looks like a little buy section right here. Okay, so you can call this whatever's next that we're going to jump into. We're steady looking for new stuff. You don't put all your eggs in one basket and think that this one trade is going to take you all the way here. I'm not going to buy down here and expect to go all the way up here and make myself rich on one trade. Each individual trade, you weigh the risk, you calculate what you can lose, and you size your position or your investment accordingly, and you're not going to win them all. In this scenario, I won 2 out of 3 trades, which means I lost 33% of the time. But it's a controlled loss, a controlled amount of risk. Nothing in this world is a sure thing. And when you invest in anything, you have to approach it from this perspective. Okay? And depending on who you ask, Bitcoin is a fraud. That's what Jamie Dimon said of Chase Morgan, JP Morgan or JP Chase Morgan, whatever they're called. JP Morgan, that's what they said. He said it's a fraud. Warren Buffett just went on the news the other day and said it's going to end very badly for cryptocurrencies and Bitcoin. And there's a million other people on the other side that will tell you the opposite, and a million people in the middle that will tell you a bunch of other things. This is why you have to think for yourself, figure out what you can invest in, what you feel comfortable with, what exposure level you're comfortable with, and give it a shot. Don't second guess yourself. Okay, so all the people out there that scream Ponzi, let me tell you, if I was to start doing an alert service, giving out free trading alerts, hey, look at this at this level, and buy this. If I was to start doing that and it was free, everybody would be like, wow, that's awesome. Especially as you started making money, and I'm right 60 or 70% of the time, you're like, man, this is great. The moment I start charging $200 for it per month, it's a scam. That's how it works. There's a lot of jealousy in the world. There's a lot of unhappy people. Everything that doesn't fit within the parameters of their psychological, I guess, capacity, what doesn't fall within the capacity of what they see as possible, is a scam. Okay, but that's not always the case. You have to evaluate these things for yourself. So let's do a quick math example for Davor. So we're going to bring this back to Davor Coin for me. Okay, let's do a quick math example, and then I'm going to give you my opinion on them compared to Bitconnect. All right, so let me get a calculator because I didn't write this down. So when I go into any type of trade, like when I was taking, and I'm sorry guys if this is long and I'm kind of long-winded, I do these videos in one take, so I don't really edit them. So it's more like just a conversation between me and you. That's why I'm always saying the wrong thing and I drag on way longer than I'm supposed to and everything in between. Okay. All right. So if I'm entering this trade, I do an evaluation and I have a process. It's top-down analysis. I have a lot of levels. I look at everything, blah, blah, blah. Okay. So I'm looking at Davor, and here's the quick, simple math that I use to get into something like this. So if I give them $10,000 worth of Bitcoin and they give me $10,000 worth of Davor Coin, they now have my Bitcoin and they're going to go into the market to do this. Okay. This trading stuff. Okay. So we'll come back to that part. All right. So let's look at so now I have $10,000 worth of Davor Coin. I give it back to them as a loan. All right. So I gave them 10,000. I know that they pay I went through and calculated it up. They pay 16% roughly in the marketing, in the compensation plan. They pay 16% of the money that comes in into compensation. So if you subtract 16% from this, let's say that's 0.84. That means there's $8,400 left. All right. So let's say I bought it not I entered into Davor at $87. All right. So that's not the right way to do that. Sorry, y'all. I was supposed to divide. All right. So I have $8,400 worth of Davor tokens, and I paid $87 per token. So I have 96 tokens. So let's just use 96. All right. So let's say I'm Davor Coin, and I take those 96 tokens and I stake them. Their staking pays in the first year, it pays 10% per month. Okay. So if I was to if I have 96 tokens and I'm staking 10% a month, that's basically 1.1 times 1.1, because my loan term was 90 days times 1.1. So at the end of my loan term, they pull those tokens out of stake. They've got 127 tokens. If they're worth the exact same $87, let's assume no gain, they're worth the exact same $87 at the end of my loan term, they have $11,116 to pay me back with for my capital release, just by staking their own tokens. And as long as their platform is still around and it's worth at least what it was when they gave them to me, they make that profit right there with the tokens, right? So they give me those tokens back. Now, the trading side of it. Well, I just showed you 3 trades, and this would have been a real day within 24 hours. Okay, I've made 2%, I made another 2%, and then I lost 1%. That's a net 3% gain. So if they're using my $10,000 worth of Bitcoin to trade every day, and they make 3%, like the example right here, that's $300. And let's say they're keeping half and they're giving me half. All right, that's 1.5% that they could pay me. Now, as a trader, you recognize that you don't get 3 trades every day. You may get 1 trade and it may be a loss. You may get 5 trades and it might be 4 wins. And you may take, 6 trades another day and lose 4 times. But if you can average out to be right 66% of the time, with the 2 times the size of your wins smaller than your losses, that's a normal profitable trading strategy. Then you could be profitable. And every day it won't be 1.5%. Some days it'll be 0. Some days it'll be 0.5%, and everything like that. So for me, in my mind, as I evaluated, that's possible. That's possible because I've traded this. What's on your screen? I've done this. I did the 3% per day for a long time. It's possible. The problem with me doing it was, you see how long I had to sit in front of my computer to get those trades? I don't have 24 hours to watch this market all day long. I have kids. I have a Rottweiler. I have stuff to do. I have to go to church. It's easier to let somebody else do this part for me. So for me, that's where the value comes in. I evaluate the risk. I adjust how much I can afford to risk, and I jump in. And that's what we did. I don't know how it's going to turn out. So let's go back to Davor. Okay? How are they different than Bitconnect? It's very similar. That's the bottom line. It's very similar. I mean, the risks are the same. Government regulations, bad actors within the company. We don't know who the people behind the company are. We don't. Poor execution. If you don't know how to trade, I just show you an example of my trading. But if you don't know how to trade and the people behind them don't know how to trade, it's going to end in a train wreck. So that's the risk. And there's also, it could be a scam or a Ponzi. All those risks exist. You do the best you can to gather as much information that you can, and you consider each one of them its own individual trade. Davor can only be this trade right here. It can't be my entire system. You diversify. You risk only what you can afford to lose, and you give it a shot. I asked the community, did you guys want me to stop sharing the progress of the stuff that we were invested and involved in? And you not unanimously, but overwhelmingly, you said no, don't stop sharing it. So we're going to keep showing you the information. We're still in Davor. Obviously, we have to be. We put $30,000 into our loan. And this isn't going to be a Davor update video where I'm going to go through the account and show you all that stuff. I just want to talk to you guys and help you to understand the angle that we're coming from when we show you this stuff. And maybe something that you should adopt in your own personal life in your investing. You can't get rich on any one thing. That's wrong. You can get rich on any one thing, but it's very hard to predict how to get rich on any one thing. Your job is to protect your money, weigh your risk, size your position according to the risk profile of the thing that you're looking at, and take some chances. And sometimes you lose, like me right here, but a lot of the times you win. And if you do good on your due diligence and your evaluation, you should win. Speaking to divorce specifically, the most probable winning strategy with them is to go with the shortest loan term, earliest possible in the life of the platform, which historically is the highest probability to win. That's what we did. It's one of my trades. I don't know if it's going to turn out good or not. And if you're not built for that level of risk, and you're not built for that level of, I don't know, I guess it's risk, and it's also psychological or mental gymnastics that it puts you through sometimes. Guys, I've been trading for a long time. It was hard for me to feel comfortable about Davor after Bitconnect. That's an honest assessment. But you know what I have to remember is I went into it with an objective set of rules, and I set my risk tolerance at something that I was comfortable with based on the profile that I evaluated it at. And I have to stick to that. It's objective. You can't be emotional. It's objective. You calculate and you do. It's the best way to move. All right. So adopt a trader's mentality. Don't try and do all one thing. Diversify. Find a lot of different things that you're interested in, and don't listen to too many people talking. People talking. If I listen to Warren Buffett and Jamie Dimon, I would sell all the Bitcoin I have right now and just go back to investing in stocks. I never invested in stocks, or I'd go in invest in stocks, or back to trading, or just sticking all my money in real estate. You can't let other people dictate what you should do with your life. Okay, you have to weigh the risk, find which angle you want to go with something, and go. And I'm going to share my journey. Me and Jim, we're strong on this. We're going to share the journey. And we asked you guys, and you told us you want to see it, so we're going to show it to you. All right. So I know there's going to be a lot of haters in the comment section on this one. I'm a Ponzi pusher, and I'm trying to scam you all for affiliate money. So, that's what's going to be said. You can't stop that. There's going to be people. Jamie Dimon is going to be wrong about Bitconnect when this is all said and done. And I don't feel any ill will toward him. He's just wrong, and a lot of you in the comment section are just wrong too. All right, weigh the risk, people. I'm sorry for the long video. I thought it was necessary to make this video, and I didn't have very many different screens to show you either, which is not good because I probably bored you. But like the video if you did like it, subscribe to the channel, hit the little bell notification so you get notification whenever we make a new video. Go join CryptUnite Global. We'd love to have you. And we're going to be doing some work on some ICOs, and we're looking at some other stuff too. We're trying to diversify within the group. We took it one step at a time. We started with some lending platforms. We jumped into mining. We're working on something really big concerning mining in the background. It's not really developing as fast as we would like, so stay tuned on that. And then, we're going to start looking at some other things too. And we'll bring them to you. Everything we do, we'll show it. Look at every single one of them as a different trade. We're not going to win them all, guys. And if you're not built for that, you probably shouldn't jump in. All right. Have a wonderful evening and weekend. I'll talk to you soon. Thanks, guys.